Dear students, in this particular video, I am going to discuss another two sums of cash flow statement, and in that particular sum, we discuss the sums under vertical form of balance sheet. Okay, in that particular problem, 31st 3 2017 and 31st 3 2018, 2 years balance sheet is given, as well as some notes of account is also provided with two additional information. That is, during the year, a machine costing rupees 70,000 was sold for rupees 15,000, and interim dividend paid on equity shares of rupees 24,000. So these are the problem you can check with your PDF. I've given the PDF. It is the sum number 49. Now see the solution of this type of problem. Okay. Now see the solution of this sum. First we calculate, that is the calculation for net profit before tax. Net profit during the year is 1 lakh. It is negative because our net profit reduces from 1,25,000 to 25,000. That means the company suffers the loss of rupees 1 lakh here. With that we add transfer to reserve. It is 1,15,000 from 45,000. So transfer to reserve is 70,000. Interim dividend paid on equity shares opening balance, it is 24,000. As we paid the interim dividend, we also pay the preference dividend on the opening balance of preference share. It is 50,000 to 8%, 4,000. So which resulted our net profit before tax, it is 2,000 negative. So with that we can start the cash flow statement. So here it is the heading that the cash flow statement for the year ended 31st 3 2018, particulars rupees. It started from net profit before tax 2,000 negative. With that adjustment for non-cash and non-operating items, from that we find debenture interest paid 1 lakh into 10%, that is on the opening balance they paid the debenture interest, it becomes 10,000. And loss on sale of machine, they sell 70,000 machines at rupees 15,000. So 70,000 minus 15,000, 55,000, they suffers loss. So after these 55,000 plus 10,000, 65,000 minus 2,000, it becomes 63,000. Okay. Now whenever you check our current asset, you see that increase in inventory is 50,000 as well as increase in trade receivables 50,000, which means the blockage of cash of rupees 1 lakh, which reduces 63,000 to negative 37,000. Okay, so cash from operation after change in working capital, this becomes negative 37,000. Wherefrom basically pay the tax, but in that particular problem there is no tax provision is given, so there is no tax paid, nil it is. So again we find the 37,000 negative, that is net cash used in operating activity. As it is negative, so we write it net cash used. Net cash used in operating activity, we find 37,000. Okay, now cash from investing activity, in that particular case you just find that the purchase of fixed asset as well as the sale of fixed asset. We already find the sale of fixed asset happened in 15,000, but we find in calculation, that is in workings, the purchase of fixed assets also involved 2,20,000, which I discussed after this particular sum. Okay, so purchase of fixed asset is 2,20,000 and sale of fixed asset is 15,000, which resulted 2,05,000. It means net cash used in investing activities 2,05,000. Okay, after that we discuss about the cash from financing activity. Here we find issue of equity share capital 3 lakh, issue of preference share capital 25,000, redemption of debentures becomes 25,000. Here cash is outflow, so it is in the negative format. Debenture interest paid again 10,000, interim dividend paid 24,000, preference dividend paid 4,000. So these are outgoing of cash from the financing activity. So ultimately we find the result 2,62,000 in the second column as the net cash from financing activity. Okay. Now in our second column we find three different amount. Number one is the net cash from operating activity, it is negative 37,000. Then net cash used in investing activity, it is again negative 2,05,000. And here from we find net cash from financing activity 2,62,000. It is our positive amount. So all these accumulated amount resulted rupees 20,000. So it is net increase in cash and cash equivalent is 20,000. Whenever we add the opening cash and cash equivalent, which are from opening balance sheet 45,000, we find the 65,000, which is our closing cash and cash equivalent as per our closing balance sheet. Okay, so in the examination hall you can check your problem that whatever be the outcome of this, that is the 20,000 here, if we add this with our opening capital balance, we find our closing capital balance. Okay, so in that way you can solve the problem. Now we see how we make the calculation or how we make the workings to find out the purchase amount of in investing activity. This is the purchase amount of fixed asset. Okay, now see the workings part. Here the fixed asset account, as per our opening balance sheet, the opening balance of fixed asset is 3 lakh and the closing balance of fixed asset is 4,50,000. In the meantime, we sell the part of fixed asset at rupees 15,000. For that we suffers a loss of rupees 55,000. So in the credit side we find 15,000 our sale price, 55,000 is our loss amount, and the closing balance is 4,50,000. So total becomes 5,20,000. Here from, if we deduct the opening balance of fixed asset, we find the net amount purchase is rupees 2,20,000. So to bank, it is the purchase of fixed asset, it is 2,20,000. So it is our cash outflow for investing activity. So it is the cash outflow of investing activity, and 15,000 is the cash inflow of financing activity. So the net result is 2,20,000 minus 15,000, it becomes 2,05,000. Okay, so in that way you can solve this type of problem. Let's see another sum. It is sum number 51. Again we take a vertical from a balance sheet for 2 years. One is for 31st March 2013 and other is from 31st March 2014. You can check the problem in the PDF that there are shareholders funds, share capital, reserve and surplus is given, non-current liabilities, current liabilities are given. In the asset side, non-current asset and the current assets are given. Okay, so these are the information, or these are the balance sheet on which we have to prepare the sums. Now we see the notes of account and the additional information for that particular sum. Here in the notes of account, we find that particulars on 31st March 2014, 31st March 2013 again, reserve and surplus, that is the general reserve and the surplus in the balance sheet of statement of PL account, these are the given here. Long-term borrowings under this mortgage loan is given here, and short-term provision for tax is given here. Okay, with that, the additional information they are provided here, that is the non-current investment costing rupees 20,000 was sold during the year of 2013-14 at a profit of 20%. So there should the sale profit on sale of investment we find here. Tax paid during the year 62,000, and during the year part of the fixed asset costing rupees 40,000 was sold for rupees 50,000, and the profit was included in the statement of PL account. With that, an interim dividend of rupees 12% was paid during the year. So you are required to prepare a cash flow statement. So these are the information. On the basis of that, we have to prepare the cash flow statement. Now see the solution part. Let's see the solution of this problem. Okay, now calculation of net profit before tax. Particulars rupees. Net profit during the year is 20,000 negative. Here also the company suffers a loss of rupees 20,000. With that, transfer to reserve is rupees 50,000. Interim dividend paid on the opening balance of capital 60,000 into 12% becomes 72,000. Provision for tax, it is 45,000 plus 62,000 minus 52,000 becomes 57,000. So it is our closing provision, and amount of tax paid is rupees 62,000. From there we find out, we deduct the opening balance of provision, wherefrom we can find the 57,000, that is the transfer to provision about tax from PL account, it becomes 57,000. So total becomes 1,59,000, that is the net profit before tax is rupees 1,59,000. Now cash flow statement for the year ended 31st March 2014. Now started the sum with these workings, that is a net profit before tax is rupees 1,59,000. After the adjustment for non-cash and non-trading expenses, there is a depreciation 40,000, it is fine from our workings part. Profit on sale of fixed asset 10,000, profit on sale of investment is again 4,000. So total becomes 1,85,000, that is cash from operation before change in working capital. With that, we see the increase and decrease of current asset and current liabilities. Here decrease in current investment, that means the cash is in place rupees 3,000, and decrease in inventories, which also resulted the inflow of cash of rupees 30,000. So these two added here. Now less increase in trade receivables, that is the blockage of money, and decrease in trade payable, that is the payment for money, is rupees 40,000. So 1,85,000 plus 3,000 plus 30,000 less 1,88,000 less 40,000 resulted rupees 10,000 negative, that is the cash from operation after change in working capital is 10,000 negative. From that we pay income tax 62,000, which is given in the problem, so it is becomes 72,000 as our negative. Okay, so negative 10,000 minus 62,000, it becomes 72,000 negative. So net cash used in operating activities negative 72,000, it is used. Okay, now cash from investing activity, sale of fixed asset 50,000, sale of investment 24,000, and with that purchase of investment should be 30,000 negative, so it becomes 44,000, that is net cash from investing activity. As is cash comes in for the sale of fixed asset and investment, it is positive, and as the purchase of investment involves the outflow of cash, so it is the negative. So total resulted become 44,000, that is net cash from investing activities to be 44,000. Now net cash from financing activity. First of all, loan taken, it is 1,50,000. Interim dividend paid, that is the payment of cash, that is the outflow of cash, is to be 72,000, which resulted 78,000, that is the net cash from financing activity. Now we find these three total in our second column, that is net cash used in operating activity 72,000 negative, net cash from investing activity 44,000 positive, and net cash from financing activity 78,000 positive. So from this particular total we find net increase in cash and cash equivalent 50,000. With that we add our opening cash and cash equivalent, it is 1,30,000. So it is with that we can add our opening cash and cash equivalent, which may be posted here 1,30,000 and 1,50,000. So it becomes 1,80,000 at the end. So it becomes 1,80,000 at the end. So closing cash and cash equivalent is rupees 1,80,000. So 50,000 is our net cash inflow. With that we add 1,30,000 is our opening cash and cash equivalent. Herefore we find closing cash and cash equivalent is rupees 1,80,000. So in that way you can solve the problem. Now see the workings for that. Okay, so it is our investment account. Opening balance of investment is to balance 50,000. Closing balance of investment is 60,000. Out of that, we sale of investment is 24,000, because 20,000 is a sale of 20% becomes 24,000, and the profit is become 4,000 here. Okay, so the balancing amount we purchase the investment is rupees 30,000. So it is put under investing activity. Now in case of fixed asset, we have the opening balance of 4 lakh and the closing balance of 3,20,000. Out of that, we sold a machine for rupees 50,000, which involved a profit of rupees 10,000 here. Okay, so 4,10,000, and here it is 50,000 plus 3,20,000, that is 3,70,000, which resulted the balancing amount of depreciation as 40,000. So here from we can find the depreciation of the fixed asset, and here from we can find the purchase price of investment. Okay, so in that way we can make the workings, and from these workings you can get the actual amounted which cash inflow and cash goes out, which is used in case of preparation of cash flow statement. So in that way we can solve the problem under vertical balance sheet. Okay, thank you.